Okay, so welcome back. Today is the 9th of October 2025. You're looking at the daily chart, the E-mini nasdaq. I have come earlier today. I am thinking of doing lives, but my computer, because I'm using a little Chromebook, I'm going to purchase a computer that uses Windows. Installing OBS on the Chromebook is hard because you have to be using Linux. Now, I think you would just keep with me uploading videos. We'll be doing lives later on when I get a computer. So, on the daily chart, remember we are working above all-time highs. So this was yesterday's all-time highs. We had FOMC minutes yesterday in the PM session. So the market rallied higher, going above this high. So how far can the market go above that high from the where the move started from to the high itself? Toggling on the extrapolated high and low, we have our target being hit, so the rest is manipulation. So I'm looking at all of this as manipulation. So this is all a manipulation move. I'm looking into that as a manipulation leg. So if I'm to do something of this sort, I think I should make it purple. Yeah, so we go above that. This candle goes above all-time highs. So at where we are, I'm expecting a little bit of retracement because I'm having a week on the daily time frame. I'm expecting the market to come back into this, straight back into this candle, or we form an intermediate term high because we have a short-term high right here from an intermediate high. So Friday is trading to give us a high here and form an intermediate high or a swing. Then we look for lower prices a little bit. I think we shall continue later. But why am I expecting that? Today is a Thursday, so tomorrow is a Friday, and I expect the market to retest back into the range. So it hasn't closed yet, but if you come to this is the low of the week, which was formed on Tuesday, and you can watch my previous videos where I talked about the daily range. You'll see how the weekly candle forms. So if I'm to add the TGIF thing on fib on the chart, you can see if we happen to have this as my weekly high, then I would expect the market on Friday to come back into these ranges right here for tomorrow's trading. So today is Thursday. We are at 11:15, so we are almost going into the lunch macro. But I want to talk about what went through for the pre-session from the pre-session and the opening bell. Okay, so dropping lower. So I'm having this week, you would want that target on your chart. That week you would want that on your chart. I pull it to just that. So yeah, dropping into the 1 minute time frame. Remember our purple box, so I'm looking at the whole of this as a manipulation move, and as you can see, I have, this is so big, I have this, all of this that goes above that. Now for the market maker model, this would be my original consolidation because we have the market consolidating, then we form. So this is, if you looked into the market maker primer series of ICT where you thought about the ATM model, so this is it. We have an intermediate term high, short-term highs, short-term high. We come back into that and you are looking for sells. Okay, you know what I want denoted on the chart? I'm looking for the 12 a.m. to 12:30, 12 a.m. to 12:30 opening range, just like that. I'm looking for, so these are the timestamps I'm looking at. I'm looking for 7 a.m. I'm looking for 8 a.m. 8 a.m. and 9:30 and also 10. So if we say it from 9:30 to 10 a.m., this is your opening range. We have the opening range at the opening bell at 9:30. We have the opening range from 9:30 to 10 a.m. We have the opening range gap on, if you toggle on the regular trading hours. I'm going to show you that when we go into further price action. So we are going to first mark out this range. If I'm to zoom out, the 12 a.m. to 12:30 opening range. So this is the 12 a.m. and this is the 12:30. So I'm looking for the lowest low in that range and the highest high right there. So I'm drawing a box from that to that high, and that is my 12 a.m. to 12:30 opening range. So I'm working with that. So if I'm to zoom out again to go back into that, before I even analyze the candles, you can see that market has been working into that, going into 9:30. So by 9:30, I'm looking at the 12 a.m. to 12:30 opening range. Now, if you're having something of this sort, this purple box shows that there is a beginning for the move that's going to go down. So this is the start of a sell model, a market maker sell model. So if I'm to use this as my original consolidation, I would want a retest into that, and as you can see, we test into half of that, then we'll drop lower. So I would have this as my distribution, redistribution, and just like that. So you remember the week that was on the daily, I'm looking for the market to work into that, and I'm looking at the levels in that. So going into the pre-session, the pre-market session analysis, I would want to have that. The pre-market session does not do a thing, we just consolidate in that. You understand? So we have the pre-market session consolidating, so we do not run for a draw on liquidity yet. And what does this show me? So if I'm to draw, let me enlarge this, the pre-session. And guys, do not forget to comment and tell me how we can uplift this and make it better. I was happy today finding a comment like someone said the sound wasn't fine. There is a video I made of the time and price theory where my microphone wasn't set. I was happy finding that someone gave a feedback, so I know that you people are watching. So it would be good if you sent feedback. Okay, so going into the pre-session, what do we have? 7 a.m. opens up. We have the bullish fair value gap, and we have highs right here and this high. So we have that noted. If I'm to put that off and use my fib tool, sorry, if I'm to draw from the 7 a.m. to that, separated hand, so I'm having the negative 0.25 left open the session. That means this shows bearishness, so we are so good on the downside. Now I'm not looking for sells, I'm not looking for buys, sorry. So 7 a.m. opens up, we have the market forming this, we drop, another drop, we form a breaker, we drop back into the fib levels, the optimal trade entry. If I'm to draw from that, to that high and target on the optimal trade entry levels, just like that. So symmetrical price is right there. We hit that going into 7, but I'm looking for these highs above and this high to be taken out. So if I'm to take that off, if I'm to take that off, 7 a.m. opens up. I'm not interested in this. I'm interested in this price action going into 7. We have this candle, this black candle right there. If I'm to mark this out as a bullish order block right there, bullish order block, just like that, going into 7. So 7 opens up, the 7 a.m. candle forms a fair value gap, which is just from that candle's high to the volume imbalance. Take it with you. We have a bullish fair value gap. So in this bullish fair value gap, we have an order block, and I expect the market to drop lower into this order block and work in this. We rally higher, showing bullish intent, come back, retest one more time, body respects, we drop lower, take out this loss liquidity, sponsor a move going high. Now if I'm to remove that, we are in a bullish fair value gap. If you have to keep that in mind, from this candle's low, that candle's high, looking for a closure back above those fib levels. So having the market giving me this, now the market coming back into that would be my entry. So this being your entry right there, your SL at the 1 fib level, targeting the high right there. So the 7 a.m. gives that entry going into that, but before 7 a.m. we form these lows right here. So I'm looking at this as sell side for 8 a.m. as a primary draw on liquidity, that going into these lows. So this will drop after taking out that. We come to the upper, to the top of the 12 a.m. to 12:30 opening range. If I'm to draw quadrants on that, like that, you're going to see how we worked out into this 12 a.m. to 12:30 opening range. The market rallies higher, we tap that, we fail, drop lower into the 0.25 level, then we break, rally back up, we rally higher into the top, then we drop lower, closing below. Now this is bearishness, and if I'm to measure for you, we have from that candle's high to that candle's low, and depending on the optimal trade entry, this would be my wannabe breaker right there. So this is my breaker. If we went below that, from that high to the breaker, to the move that you expect the breaker to come from, we have that optimal trade entry, we ride it into the sweet spot, drop lower. If you didn't look at that, you would wait for a fair value gap to form. I'm having a bearish fair value gap right there. Extend that into price right there. Now this is a bearish fair value gap, as you can all see. So I'm having that right there. We drop lower, have these lows taken out. How far can the market go beyond those lows? If I'm to draw the fib level from that to that, how far can the market go? Extrapolated low and high, you have the negative 0.25 level, which aligns with this breaker. We come and tap that, then the market goes back into the 12 a.m. to 12:30 opening range. Excuse me. So alhamdulillah, we drop, we have a fair value gap right there, which is respected, going into 8 a.m. 8 a.m. opens up, we have the market shooting up, then coming back for the negative 0.25. We rally back higher into this. So this is all accumulation going into the 9:30. I don't think we have any business right there. So if I'm to tag on the regular trading hours, remember we said we have 2 trading hours. We have the electronic trading hours, which open up at 6 p.m. in the night. Is it the night? I don't know, depending on where you are. And then we have the regular trading hours, which have their open at the opening bell at 9:30. So there is no price action prior to 9. Now, as you can see, the whole of this is empty. So we had this as a box with price action, but in the regular trading hours, we have no price action printed in that. Now, from where the market closed to where the market opened at 9:30, that is your opening range gap. If I'm to take on this right there, it's going to be marked. You have that purple line from this candle's low to that candle's high. This right here, from that line to that line, that is your opening range gap. And as you can see, it's all filled. Now going back into the electronic trading hours, I'll talk about that more, I think, in another lecture, when I'll be talking about the new day opening gap, so stay tuned. Now I want us to look into price action at 9:30 using our current models that we do have. So 9:30 opens up at this candle. We have this candle manipulating, giving me a high, and I'm having a low. What do I want? You all know the optimal trade entry. So I have from that candle's high to that candle's low. I think my optimal trade entry. Isn't this a strong entry? With all the volume that the 9:30 candles open with, they do not disrespect these levels. Look at that, take time, you take a screenshot, revise that in your free time. So you have from that candle's high to that candle's low, the market drops, opening up at 9:30, comes back into this, we rally higher into the optimal trade entry. So this is my short position right there. Stop loss at 1 standard deviation. Stop loss is not hit. And what does this help you? This helps you locate the this helps you locate the protected highs. We have this sell side as a fine goal. We have this, and then we have going into this daily week, because I expect that the market to drop into that. So I'm first taking my take profit at consequent encroachment of that week. So that's where I expect the market to go to right away. Now, if I'm to mark out this as a box, and mind you, we are working in the 12 AM 12:30 opening range, so I'm expecting these levels to be strong. Now, if I mark this out as a box right there, trade entry, bearish optimal trade entry, zoom back into this price action right there. So this is my optimal trade entry. I'm going to put that off. Don't want my chart clocked. Putting this off, having the market working in that. Okay, so we drop lower, but to consequent encroachment of this week, how far can the market go? Perhaps if we manage to reach there. Wow, this is beautiful price action. The negative 0.25. Should I extend that into price? I can't even. Let me first mark out that high. Yeah, I was right. Had marked it well. Okay, this is the negative 0.25, and as you can see, the market drops, coming into negative 0.25 as your final target. After that is hit, we have a retracement high. Then this beautiful. Okay, going into price action 101. So this, let me make it light blue. Wow, let me make it light blue. This is so beautiful. I love it when things work out for me. Let me make it so that you can see. I do not need the middle line. The background, the border is going to be black and dark black. This is my optimal trade entry. This would be my entry for the 930. Now going into, this is 931, 932, 933. So this is my first presentation fair value gap from that candle's high to that volume imbalance right there. As I'm not expecting the market to, I'm not expecting bullishness. I'm expecting this fair value gap to hold, the first presentation fair value gap, and when it holds with great momentum and great power. So we have the market come trading back into that, staying below that first presentation fair value gap, and you drop your stop loss to the second candle of that fair value gap. So my stop loss is already at break even. I'm adding in more contracts right there. We drop lower, reaching that week, candles week. We failed to reach the upper quadrant, and this would be me taking off some contracts. As failing to reach this shows bullishness. We shoot higher. This would be me entering again, re-entry right there, going into the upper quadrant of the upper half of the first position fair value gap, and then we drop lower, toggling the what? And the upper quadrant. So these things are panning out so well. This is beautiful price action. To those of you who didn't have this or didn't see this, in Islam we say inna lillahi wa inna ilaihi raji'un. So we drop into the upper quadrant, we come back higher into this fair value gap, going into the 10 a.m. So 10 a.m. opens up, we first drop. Now this is the open of the candle. If I'm to mark this as the open, right there, now that blue line is the open of the 10 a.m. candle. The market drops. That means this hourly candle has no top wick. The market rallies higher, giving it a top wick, coming back into the fair value gap right there, and then we drop. Now the optimal trade entry for 10 a.m. is right there. I'm expecting a continuation lower from that candle's high to that candle's low, having the optimal trade entry right there. Now where are you going to get something that works every single time? We drop lower. To take this line off, we drop lower. This is a fair value gap. It does not get respected, but what is the market aiming for the 0.618? Come back into that, fail to reach it, respecting the top of the daily week. We drop lower, hitting the targets of that fib. Then we come back into that top one more time. We fail to close above it. If we closed above this, you would be looking for pulling lower your stop loss and securing profits. Now this is where you wouldn't want to work with prop firms that have trailing drawdown within the day. Now for apex funding, you wouldn't want the market to come back into this, because the drawdown would trail if you reach this low and you didn't take profits, and your drawdown would decrease. Now we drop lower, closing below that, market rallies higher, you have an order block. So this forms an order block. We come, this move coming back into this, retests into this week, that week's low, we drop lower, leaving a fair value gap right there. Now these fair value gaps are references for future price action. Now I'm having this bearish fair value gap right there, respected neatly, going into the lower quadrant and to the negative 0.25. So we rally higher. You get, we rally higher into that, and we managed to close above it. Now when to close above it, it is used as an inversion fair value gap. So the inversion fair value gap right there. The market rallies higher, we accumulate, we have a fair value gap here. I'm going to show you how these fair value gaps change their purposes. So I'm having a fair value gap right there, which is a bullish fair value gap. Now this being a bullish fair value gap pushes price, and we fail to reach the top of the daily wick, and then that starts a move lower. Going into 11:30. Going into 11:30 right there. So note this inversion fair value gap. I expect it to turn into a reclaimed fair value gap if we are to continue pushing price lower. So if we happen to close below that, I'm expecting it to turn into a reclaimed fair value gap, and this turns into an inversion fair value gap. Now that's how the purposes of these fair value gaps change. This was a bullish fair value gap before, turns into an inversion, this times into a reclaim. So this has been reclaimed right there. I expect if the market comes back into that step in the lower quarter of that, then we drop lower, but we are in this right there, half of the daily week. Look at that right there, right there, drop lower. Okay, half of the reclaimed fair value gap. Yeah, just like that. So I do not want, so going into the lunch macro, I'm expecting the market to drop lower into these lows. This candle has no bottom wick. I'm expecting this to be taken out and drop into the lower quadrant of the market again within the open of the lunch macro. So let's sit and watch. I wouldn't want this video to go long. I think after that is hit. So let's look at just an objective right there. After it is hit, I think we shall close and wait for the lives. So I want you to look at how the market works within that reclaimed fair value gap. I want you to look into how we stay in the lower end of that reclaimed fair value gap. If it still has its efficiency, then we will have to stay in the lower half of that. Going into, so if you would have to trade without fear, so that would be it, and that would be my stop loss right there. So let's step read this a little bit more. Going into that, so let me we have formed a bearish order block right there. So this is bearish order block, expecting the market to respect that. That's a bearish order block right there, coming from the reclaimed fair value gap. I want to trail my stop, going to mark the quadrants on that reclaimed fair value gap. Right there. So I want quadrants on that. 0.25, the lower quadrant, above, between the lower quadrant and the consequent encroachment of that fair value gap right there. My stop loss is at that, not at the high, at that, because this high didn't reach the lower quadrant. That means the market can come and tap that lower quadrant and run again. So I'm looking at that. Now we have this fair value gap right there. Market taps that low. I'm going to break even right there. So this is your break even point right there. Closure below that, I'm expecting speed. Beautiful. And that would be your take profit hit. Now for futures, if this was the mini, now why was I expecting these lows? This candle has no bottom wick, and we have a fair value gap right here in deep discount. So I expect this fair value gap to push price higher, to have a bigger retracement. Now this would be a nice trade right there. So I'm looking into this. See how the market reacts at that. That fair value gap is in deep discount, so I expect the market to run from that, giving me a deep retracement before we drop lower, or maybe come into the low of that week. Remember, the low of this week has a bearish day on the daily time frame. That means that is an order block. So reaching this low gives me insight of a bearish market. Okay, I'm still having my reclaimed fair value gap on the chart right there. And I would not fear to execute on it if the market came for it one more time, because I expect it to hold the market till we reach a primary goal. But anyway, with that being said, thank you for watching. We are having, first and foremost, now everything is possible right here. We are working into this, and I'm having the lunch macro. So the lunch macro will run for a high that was formed above 10. So I'm having these highs right there, this high. So I expect the market to come and rally maybe above this or something of that sort. Now if I'm to draw my fib, this is what I wanted to show you. The breakout would be at that candle's high. Now I'm drawing this before it happens. Now I have my optimal trade entry. So I would have another buy entry at that right there. My stop loss at that, targeting this highs right there. We have reached the reclaimed fair value gap, so I expect the market to drop from that, coming back into my entry. I expect the market to come back from this reclaimed fair value gap into my entry. If that fails, then and this is inversed, then I'll be taking the buy from that. I didn't want this video to be long. Now this is a great sign. This reclaimed fair value gap is still holding, so I expect the market to drop back into my entry to come and pick me up. I didn't want this video to be long. Okay, I expect the market to drop and come back into the optional trade entry or the sweet spot. And I'm saying that, why is my target bullish when we are in a bearish market? I'm looking for highs because we are in the lunch macro, and the lunch macro, expect the lunch macro mark from 11:30 to 1:30. The lunch macro is going to run for inefficiencies or highs that were formed after 10 a.m. So we are having equal highs right here that were formed after 10 a.m. having an inefficiency above that. The market is dropping lower. I expect the market to come and take me in. Expect the market to tap me in. Okay, as I was saying, we have relatively equal highs right here. So this is clustered liquidity here and this high. So I'm targeting the daily wick high. So 11:30 to 1:30 initiates a run in price towards highs that we have formed. If we are in a sell model, we are going to run for highs that we are formed after 10. If we are in a buy program, we are going to run for highs that we are formed, for lows that we are formed after 10. Okay, we are not tapped in yet. Market hasn't tapped us in yet. I'm waiting for that. We'll have the market testing into this tiny fair value gap right there. If this can give us a move lower into my entry, and then we invest that. expect that to be an inversion fair value gap, so I expect the market to drop, give me my entry, and we inverse this going higher prices. I want us to be in this. Okay, we are tapped in that trade, as you can see right there. We are tapped in. Sorry, I put this the wrong way. With precision, we are tapped in. I think this is going to be a no drawdown type of move. Okay, now what am I waiting for to fail if this trade is going to go in my favor? I'm waiting for this fair value gap to fail, to be inversed. Then my reclaimed fair value gap, let me put this off, these targets. I don't think I need this. The one has to stay. The 0 is going to go off. Now I want the market to rally higher into this. If I can get a closure above the consequent encroachment of this and close into the upper part of this fair value gap, that would be great. So we are forming a swing low. We have short-term low, intermediate-term low, short-term low. Okay, I did not expect this low to be taken out right here, so I expect this to be a no drawdown type of move. Okay, I'm sorry this is going to be a long video, but you have to watch it. I have to show you that what I'm giving you works. So I expect this reclaimed fair value gap to be inversed again. Now I was watching some YouTuber and he was calling it a re-inversion. I don't know what that means. A re-inversion fair value gap. Isn't that hilarious? A re-inversion. Like, it's just funny. It's like how this video of ICT when he was arguing about these guys who rebrand this concept, saying a Wally block. That was a funny one. Saying what do you mean by a Wally block? That thing, I found that hilarious. Okay, we are waiting for price to work its way into that. I'm having these multiple down close candles. I'm not taking this candle to be my order block right there, that candle, this black candle, because its body did not go below this, the last candle of these three. So I'm taking this as my order block, bullish order block. If the market surpasses that, expect the market to give me some price action on that. Isn't this nice? Market working on what I say. I expect an inversion of this, market closing above this. We have 2 seconds left. Okay, so this is good. This is beautiful. That is beautiful. We retrace back into the consequent encroachment of that inversion fair value gap. I don't want the market to close below that volume imbalance right there. So if I'm to zoom in for you, we have this volume imbalance right there. I expect the market to be held by that. Isn't that me being a genius? Now the market just taps that and we start to rally, and that is so fine. That is so fine. Now expect that closure above the order block. Yeah, beautiful. So we have closed back into the reclaimed fair value gap right there and closed above half of that daily wick. So we retest back onto the order block right there. Okay, the move started from the volume imbalance right there. I expect the market to rally above this. After we rally above that and close above it, I expect speed going into this inversion fair value gap and reclaiming it. Okay, we tap that inversion one more time, stay in the upper half of it. So I don't expect the market to drop lower again and take out this low coming into the low of that inversion fair value gap. So the low of this to stay protected. That means consequent encroachment is my observation to either closing or staying in this trade. Okay, I'm looking at either consequent encroachment of the reclaimed fair value gap or the full gap being inversed or closing above consequent encroachment. Okay, to make it an inversion, 22 seconds left. That is beautiful. If we could stay above that price action right there, I need a closure above consequent encroachment of that black line that has the word reclaimed fair value gap. I expect the market to stay above that. Unfortunately, we fail. Now I expect the market to correct with volume. Beautiful. Then that's beautiful with volume. Yeah, tapping into the inversion fair value gap. So I do not want to see a rejection coming from that inversion fair value gap. Now, if this candle closes above this reclaimed fair value gap, this turns into an inversion fair value gap right there, and this being a reclaimed fair value gap, just like that. Now that's how things change from inversion to reclaimed. Okay, wow, I wish we could close above that. Beautiful. So this is like a live commentary for price. That's funny. This is a live commentary for price. We drop back into the lower half of the reclaimed fair value gap. I expect this candle to give me a breakaway gap because we have been working into the range below this inversion fair value gap right there. Turn that off. Going into the take profit levels right there. Now what else can slow me down? This. And in that we have an unfilled portion of this fair value gap from that candle slow to that, so that can slow me down, but I want it to be disrespected right there. And I think, do we have a volume imbalance? No, we do not have a volume imbalance. Now this is beautiful. Now I don't expect the market to come back into this fair value gap. This is a breakaway gap. The market was pulling from that range coming higher. This is a breakaway gap. Worst case scenario, if we come back to that, the upper level of that, I wouldn't want the market to touch it, but if it comes back into this, I would want it to stay in the upper half of that breakaway gap. So just like that. You have your price action, you have tapped that. Going into this unfilled portion, expect the market to just rally above that to inverse that. Price action 101. I'm not liking that rejection from where the market is. If we come back into these candles, that's now your stop loss can be at break even at this point, because this has to be a breakaway gap. The market has to run from this going higher. Leave a volume imbalance right there. I'm looking at that. Looking at the market, if it comes back below that, to respect this volume imbalance. Remember, volume imbalances have room for error, so the market can go below it, but I expect it to correct after it goes below that, to correct quick, because we have a reclaimed fair value gap right there. Close above that, we drop into that. After, I do not expect the market to surpass this. Drop that into that, just rally higher, inversing this. If we happen to come back to the volume imbalance, those two blue lines, so now this turns into, leave alone this volume imbalance, this turns into a balanced price range. Now from this balanced price range, this candle is weak. I expect the market to use that as a PDR, and I expect the market to rally from that with speed to my high. This is a balanced price range. The market, let me see this candle, because the market has worked on both sides of the market. We sold, then we bought, market drops lower, then we buy. Half of that range we drop into the lower quadrant of that. Price action 101, real time, we go higher. Expect speed from that going into my target. That's a balanced price range, a BPR. If I am to change that, I have a BPR saved. A balanced price range. Beautiful. That's a balanced price range. I expect speed from that. $11.55. We are in the macro. From 11.50. That was 11.50 to 12.10. Wow, this is a huge time window. 11.50 to 12.10. So this is the macro. I expect the market to reach my targets within this range, then continue in whatever direction it wants to go to. We are working again into that balanced price range. I think, yeah, that's the upper half of it. If I'm to denote it like giving it quadrants, I have to go, and that I have to go. So under those two levels, upper quadrant hit, then a rally higher. Not the low of that small portion of the inversion fair value gap I had marked. Note that. We drop back again into the upper quadrant. I expect the market to remain at that, not coming back into constant encroachment, because I expect that BPR to give me a big reaction going into my high, into my target. we stay at that. Yeah, beautiful, as suggested. ICT thought. Now it showed me a support and resistance trader. Those guys who say that ICT is a fraud and ICT traders can be profitable. I want to see someone interpret price as I do, from candle to candle, time to time, going into targets just like that, seamlessly. Give me my target. Come on. Come on. Don't be shy. Don't be shy. Give me my high. Give me my high. Beautiful. Beautiful. We have take profit taken out, so I'm taking out at that. Beautiful price action. 101. As you can see. Just like that. So take time. Look into that. If I'm to screenshot this, capture. Thank you for watching.